Welcome back to another episode with ByrdAdatto. As you know, yesterday we did work on a little bit more on giving some ideas of what's going on with the PPP loans. And a lot of you are looking at lots of different things coming out of different, we were talking about the SBA yesterday. Today we're going to talk about some things coming out of the Treasury Department, because every single day something new is being released, and a lot of our clients are asking us for some guidance and clarity as to, does this apply, does not apply. And so sometimes, Michael, we can answer that question for them, but other times we have to find someone smarter than us to help us out. So today we have a special guest who has been here before, but I'd love you to introduce her.
Yes, joining us again is Jessica Nunn, founder of Skytale Group. And if you haven't heard her before, Jessica's awesome. She, Skytale Group, has been instrumental in helping guide us and many clients through kind of the financial side of the PPP loan, and look forward to getting some more pearls of wisdom from you today.
Thank you. Happy to be here as always.
Well, Jessica, as I was introducing this particular video, I was referencing the fact that, like I said, different parts of the administration is going to be releasing different information throughout this pandemic as to how things work. And the Treasury Department last week released some more information on tax credits and the cost of getting free money, as we were talking about. So can you kind of jump into and address those two different pieces? One has to do with tax credit for employees, and one has to do with how you could be taxed on benefits you receive from the government.
Sure. So let's start with the guidance that came out that essentially allowed employers who are taking the employee retention tax credit some additional leeway with what exactly counts towards that credit. So remember, there's an employee retention tax credit, and that's for taxpayers or businesses that did not get the PPP loan. So if you got the PPP loan, you can fast forward the video. This part does not apply to you. So it does not apply to most of our clients, and likely most listeners, because a lot of businesses have gotten the PPP loan. But in the chance that you didn't, this is essentially what we've been calling your consolation prize. So your consolation prize is that you can take a tax credit against a certain amount of wages that you pay during quarters that you were heavily impacted, which would be quarters that you're closed. So if you kept paying employees during the time periods that you were closed or your revenue was reduced, then you can get a tax credit of essentially $5,000 per employee. That's the maximum. And what recently changed was that they said, well, if you're not paying your employees, then there's not much of a tax credit. And then someone said, but wait, we're paying their health insurance, so shouldn't we get a tax credit for that? And initially they said, no, you can't, that's not wages. But then they came back and said, all right, you can use health insurance as part of their wages in calculation for this credit. So that's essentially what's happened. So it feels like you guys have been reporting a lot on the developments of these rules, right? So they'll say, this is the rule. And they'll either further develop the rule or change it. Someone will come in and say, I want to change the rule to this. Then they'll go back and change it. So, it's important to keep educating everybody on not only the rules, but the changes that are occurring as we go. And this is one of them.
And I wonder if, what Brad and I talked about yesterday is this idea that some people may choose to return their PPP funds because of how the government is now redefining, whether or not you had adequate liquidity at the time that you applied. And we know that, as we talked about yesterday, that mostly applies to a lot of the larger companies, people that borrow, $2 million and more.
Right.
But would this consolation prize be available to someone who did choose to return their PPP funds?
Yeah, I would assume so. I would assume that if you're not using PPP to pay for wages, or you haven't, you're not essentially taking advantage of, right, this free money aspect of the PPP, then you would be eligible for this credit. I haven't seen anything that certainly says that, but that would be my assumption. So for those of you who some people, I will say too, didn't apply for PPP because maybe they didn't have enough wages, or they thought, it's not really worth it to me to track all that. It's not that much money. Well, then I would certainly look into using this credit because it would be available.
And then the Treasury Department follow up with that with another update as to the guidance as far as those who did receive certain benefits.
Right. So if you got PPP funds, as you guys know, the some of the rules and details around that is trickling in a little bit every day, right? And we're looking for more guidance so that we can strategize around using the funds. But when it first came out, there was a lot of talk here in the CPA financial community. It's an exciting conversation about how do you guys think that will be allowed deductions for expenses that this PPP loan is covering? So I'm not paying payroll. I'm not paying rent. This PPP free money is paying for these things. So do you guys think the IRS will allow us to deduct those? And most people in this industry said no. The IRS they're not going to let you like deduct expenses that you're not actually paying for. So this clarification was not actually much of a surprise for us. We thought, in the past, when you've gotten money that's tax exempt, right? Money you didn't have to pay tax on, kind of like free money, the expenses incurred by those funds have not been tax deductible. So this was really the IRS just going back and saying, well, what do we usually do in this case? And this is what they usually do. So this, I would say as a listener or as a business owner, I've been getting some calls about people really concerned about this. I don't think this is something you should be overly worried or concerned with. What they're simply saying is, if you got this money and you're not paying it back, so remember, it's only for the forgivable portion, right? Whatever flips to a loan, that's just like a loan. Expenses you use with loan money are deductible. But if money comes in and that amount is forgiven and you use it to pay payroll, rent, you'll not be able to deduct those amounts on your tax return.
Right, and that's just for that moment in time. So any wages you paid before that or above the amount of money or any rent that you paid after that, you still will be deducted. You just have to work with your CPA or your financial advisors to make sure that small portion and moment in time that was forgiven is not deducted.
Right, and so if you kind of walk through what that means, it really says that, okay, these funds then that you're getting and turning around and spending and not getting a tax deduction, it's kind of like they're taxable to you, which wasn't necessarily the intent, but when you work backwards, you get to the same answer. Okay, well, no tax deduction means that it's kind of like it's taxable income. But if you think about those funds are coming in to replace income that you didn't get.
Correct.
You got $50,000 because you didn't collect $50,000 from your patients, you're almost in the same boat, right? So I don't think that this is no reason to send back your PPP money, right? You shouldn't be sending it back because, oh my gosh, now it's a tax problem. I suspect that the ramp up for a lot of clients will be a long process. Therefore, you'll have some losses. So your tax situation this year, always speak with your advisor, but I don't think this is going to create a horrible tax problem that we should be super stressed out over. I will say though, like we talked about with the other recent legislation, right? That some people are like, well, this just isn't right. And this just wasn't the intent. So I wouldn't be horribly surprised if they're talking about right now changing that and allowing for the deductions, which would be kind of like another bonus, right? That would be certainly something that the IRS doesn't do very often.
Well, I can say from what we've seen so far, there are a lot of moments and times that things that don't go normal ways. And during a pandemic, apparently a lot of things that don't happen often are happening. So love your information, Michael. I don't know if you have any follow-ups.
No, I appreciate the help trying to figure out if free really is free. We are learning something different every day.
Absolutely.
Yeah. And really, it's just a matter of stay tuned, right, on the next episode of what we learn about this whole thing.
Well, Jessica, you took the words right out of my mouth, so I guess we'll close this out. But thank you again for joining us. We always appreciate your insight.
Yes, thank you guys.
Thank you.
All right, until the next episode, as she said, we'll keep you informed.